Good afternoon, everybody. Thanks for joining us. My name's Heather Sanchez, and I'm the market president for BBVA's Inland Southern California market. And on behalf of my colleagues at BBVA in Los Angeles and Orange County and San Diego, we wanted to welcome you to the latest installment of BBVA's Southern California webinar series. So today's topic is defending against fraud in the COVID-19 environment. And I'm sure that we've all been to a lot of fraud presentations that have had a lot of scare stories and statistics, but really left us wondering what to actually do about it. And certainly since the beginning of COVID, fraud has definitely evolved and increased. So we really wanted to put together a thoughtful discussion for you all today from a bigger picture perspective and really look at fraud from an IT standpoint as well as insurance, accounting, and banking, and provide you with some really practical and applicable solutions that you can put in place, as well as highlight a few common pitfalls that we all see. So with that, would like to introduce today's speakers. And next slide, please. So on the line today, we have Daniel Calderon, who's a senior VP here with BBVA, and he leads our treasury management and cash management solutions, including fraud prevention services. We also have Adrian Francos, who's the CEO of Zeta Sky, and he's an expert in cybersecurity for small and medium businesses and helped dozens of companies respond to cyber threats and attacks. And then we also have Blake Pearson, who is a partner with Gallant Risk and Insurance, and he provides risk management and commercial insurance, and in particular helps companies assess risk and look at cyber insurance. So I just want to remind everybody to please don't hesitate to use the chat feature at the bottom of your screen to ask questions at any time. And we can answer those as we go along. And certainly at the end, we'll have some case studies as well that you can ask questions and dialogue that way. So with that, I will turn it over to Adrian.
Thanks so much, Heather. Are you able to hear me?
We can hear you.
All right, perfect. So thanks again for having us, and thanks for all of you attending today. I'm going to jump right in, but before I do that, I'm going to do a quick poll, and you're going to see a pop-up on your screen that's going to ask if your company or you has been victim to a cyber attack in the past. If you have, click yes. If you haven't, click no. Just want to get a feel for those of you who have maybe had an experience and you might be able to relate to this. So we're going to give this just a few more seconds, and then we'll close the poll and get started. All right, so let's do 3, 2, 1. We're going to close the poll and let's see. So not surprisingly, as you'll see, nearly about 60% of those of you attending today have been involved in some sort of cyber attack, which is not shocking. So let's jump in what we're going to cover. So first off, I want to cover the business and the trends of cybercrime, right? What does it look like? What's been happening in the last few years? And get into some real world case studies at the end. We'll talk about the basics of network protection, but again, this is really about fraud, so we're not going to jump in too deep, but if you have questions, feel free to chat those in your questions box in Zoom. And then we'll talk about some incident response, risk control. That's where Blake's going to take over and really jump into how do you react once you've had a cyber attack and how's the best way to plan. So let's take a look here at what I call the business of cybercrime. And I really use that word because it is a business. Now, these are criminals, they're doing criminal activity, but it's important to note that these groups are running a business. They are trying to do one thing and one thing only, and that's profit from the crimes that they commit. So all these stats that you see on the screen that I'm going to share with you here over the next few slides come directly from the FBI. Every year, the FBI puts out a report called the Internet Crime Report, and this is where this is coming from. So in 2019 alone, now let me put an asterisk here, these are all reported numbers. I can tell you, I worked with many companies that don't necessarily report this to the FBI, so keep that in mind. But in 2019 alone, there was $3.5 billion in losses due to cyber fraud. why is this growing? Right, I'm going to show you in the past years how this has increased. But just in the last 4 years, the amount of internet users has more than doubled. In 2015, there was about 2 billion internet users, and last year we came in over 4 billion. I think we all feel like the internet's been around forever, but realistically, it hasn't. And so it's just growing amongst the majority of people, using the internet, of course. Another popular myth is that the cybercrime only attacks big companies, right? But the reality is it really affects all sorts of different companies. And so whether you're a small business, medium business, or large business, we're all susceptible to becoming victims of cyber attack. The thing is, we only hear about the big companies on the news. And again, we're a reactive industry, both from the FBI standpoint, the way we react, IT companies, cybersecurity companies. There's an attack somewhere out in the world, and then we react and create a fix for it, right? So let's jump on to the next slide here. Let me go back real quick. So here what you see is a makeup, just real quick, of globally. No surprise, the United States makes up the biggest chunk, nearly a quarter of all of cybercrime. And the reason is for that is simply because we are one of the biggest economies in the world. And for those of you listening, I know we are located in California. We're lucky enough to be, again, a big target for cyber criminals because, again, it's a business and California is a large business economy. When we look at the trend over the last several years, it's, again, quite frightening because it's exponential. The FBI has only been keeping statistics for the last 5 years. And if you look at in 2015, the total losses came out to just over $1 billion. And again, in 2019, the losses totaled just over $3 billion or $3.5 billion. So let's take a little bit deeper look into those statistics and take a look at what types of cyber fraud, because this is really going to play into what Blake and what Daniel are going to go into. But if you look at that first line, BEC stands for business email compromise, or EAC, email account compromise, is nearly $1.7 billion of these reported losses. No surprise, again, they're going after companies. That's where the money's at. That's where they can get us to do things like financial fraud, wire fraud, ransomware, which you see on the screen here as well, made up $9 million in losses. And again, these are just reported losses. There are other companies that get affected that don't necessarily report them. So more specifically, right, those are the stats, but what are they really using? Well, again, 10, 15 years ago, hackers really relied on technical ability, right? How do I penetrate a company's firewall, get past antivirus, things of that nature? They're doing less and less of that, and they're using more of what we call social engineering. Basically, scams, if you will, to trick us as business owners or employees of a company to just hand over information or money. So email is still the primary delivery, as we saw in the last slide, but they are also using social media, right? Facebook and Instagram type of scams. They're using voicemails. If you've ever gotten weird voicemails getting you to call a number back, pretending to be an agency perhaps, or even text messages, that's becoming popular as well. So they are starting to use different avenues, but what we see primarily is still scams delivered through email. And again, what they're trying to do is target that human firewall, not so much the technical firewall that you have up in your building. And again, they're use phishing or spoofing or spear phishing. We'll talk a little bit about what that is and some examples of that. So here, there are literally thousands of examples of these types of hacks, but I just have a couple to show you here as an example. This would be an email maybe that would fool a certain percentage of employees, right? Because, or even in their personal lives, they think, oh my gosh, I've gotten an email from Chase. I have to verify my account. If you're not paying to all the details of this particular email that might look a little scammy, and you click that verify now button, it's going to take you to a website that really looks just like chase.com. They're going to copy what chase.com looks like. And then you go to log in with your username and password. And that's really where the danger happens, because not only have you given them your username and password for Chase, but like most people that we have pulled, you probably use the same password for multiple websites. So as soon as they gain that information, they're going to go and start attacking all the email platforms, your corporate email, maybe like Gmail or Microsoft, Amazon accounts, you name it. they can automatically try those same login credentials on multiple websites and get really dangerous. Another example would be Amazon, right? I'm sure, especially during now with COVID, these threats are even heightened because we're all purchasing things on Amazon, and maybe we're busy, we're not paying attention, and we get an email that looks just like this one. And you might think to yourself, well, I didn't order this part. What is this? Let me click on the link and see what it is. You click on the link, same story. They're going to have you log into your Amazon account. And if you're guilty of using the same password on your Amazon account as you do for other websites, they're going to compromise those as well. So what are the major steps they do? Well, it's quite simple, really. Think of hackers as criminal marketing companies. What they'll do is they'll identify a target. Perhaps they look at your business, they find you on LinkedIn, see that you're active, maybe seem like a profitable small business. They're going to identify a target. They're going to see, okay, who's the controller in your company? Who's the CFO? Maybe who's a director of operations, right? And they'll either gain access to someone's email account, like in the previous example that I just showed you through phishing, or they'll pretend. They don't even have to necessarily hack an email account. They can send one that might look like it's coming from one of your coworkers' accounts, and they'll start grooming that subject, right? And I'll show you a couple of case studies of what that would end up doing. And really their whole goal in step 3 is to exchange information. Maybe you'll hand over passwords. Maybe you'll hand over employee information. During tax season, for example, we see these scams through the roof where they're pretending to be a coworker asking for maybe employee W-2 information or health insurance information. And what they're trying to do is steal that and sell that. And then ultimately in step 4, in some cases, they might actually successfully get you or one of your staff to wire over money fraudulently, right? Maybe paying a fake invoice is a common example. So again, that was really fast, and I'm moving through this quickly so we can all cover all different parts of fraud. But how do you protect against this from a cyber standpoint? Again, I'm not going to dive into any of the technical details on this call, but really the major theme here is to have a layered approach to your protection, right? So having the basics in place is not even a want anymore, it's a complete need. If you don't have at least these basic layers, there's an issue. Number 1, have proper IT management. Make sure that your IT team has all the permissions and access and policies set up properly so that you don't have employees having access to everything in the company or files that they shouldn't have in case maybe one of those accounts becomes compromised. When you have people leaving the company, make sure that their accounts are completely disabled and that there's no access left over. Of course, things like your firewall and antivirus, you have to have those in place. They have to be up to date, make sure that they're patched and that you have active subscriptions with them. And again, that your IT team is keeping all of those systems up to date. And of course, email protection, making sure you have multiple spam layers, advanced threat protection, maybe even keeping employees from clicking on those links. They might have protection that doesn't allow them to go to those infected websites or fake websites. So, and again, I apologize, I'm going to scream right by these, but I promise at the end, I'll provide an avenue for more information on these. But some additional layers to consider that a lot of companies are putting in place, and I know the banking industry has really been on the forefront of this, is making sure you have strong password policies, maybe even a password or a corporate password manager, something like a LastPass, one login that automatically creates complex passwords for your employees. Mobile device control, especially with COVID, more and more of us are working out of the office from home on our phones, on our tablets, making sure that as a company, you have control of those devices. You can wipe them if they get lost. You can control the data that's on there. Web content filtering. In short, making sure that employees aren't inadvertently going to that fake Chase website or that fake Amazon website, and they don't accidentally hand over information. Encryption, both on computers, your email, and how you share information is crucial, right? Using things like OneDrive or SharePoint, ShareFile, and avoiding public services like a free Dropbox account, for example, is a major one. One of the most important on here that we think the FBI agrees as well is multi-factor authentication. Again, I have to give it to the banking industry. They were one of the first to push this and make it a requirement for all our clients. But basically this means that when you log into a website or even your company network, it's going to require your employee to put in their username, password, but also another code that they would get, let's say, to their cell phone at that time. Meaning if someone steals their passwords, but they don't actually have your employee's cell phone with that specific code at that time, they won't be able to log in. So it really ensures that we're keeping unauthorized access out of your network. And one of the most important layers too is having backup and recovery. And as we're going to talk about in the case studies, to me, that number 6 on this slide is your safety net. If all else fails, you need to have a solid backup and disaster recovery plan so that, let's say you get ransomware, you can recover on your own without being victimized by them and not losing valuable data. Last but not least is the most important layer. I keep saying most important, but it keeps stacking up. They're all important, is making sure that you spread awareness in your company, right? You can't avoid something if you don't know what it looks like. If you have never experienced phishing or aren't aware of the latest threats, how can you stay protected? So one thing that I am a huge proponent of is putting a security awareness program, cybersecurity training, right? Doing phishing tests. So real quick run through, what we like to do with clients that we work with is actually send out fake phishing emails to their employees and see how well trained they are, how aware they are. Are they going to click on these links? From there, we'll do at least yearly training. Preferably, you can do a master course once a year. Let's say it's about an hour interactive online course, but then maybe send out weekly or monthly little tidbits of the latest trends that are happening. And of course, you can do reporting and track results. And the whole goal of this, let's say you're a company with 100 employees, is you can make sure that all 100 employees are trained, but also maybe which ones tend to click on these phishing tests a little bit more. Maybe they need a little bit more one-on-one handholding. You know, the way we're thinking about this is just like we want to keep your firewall up to date, we want to keep your staff up to date as well in terms of the latest threats. It's a quick slide of what a training module would look like. So last few tips that you see on the screen, and then I'm going to hand it over to Blake to talk about how do we reduce the risk. But last 3 tips. Number 1, do not use the same password over and over again. Make sure it's complex for each website or each system you log into, and make sure they're different. If you don't use a password manager, jot down www.lastpass.com and go check that out after this webinar. Think before you click. If you see an email that sounds too good to be true, it's a little too urgent, it's asking you to take an action, especially if it involves money, think about that, slow down, maybe contact your coworker or contact the center directly through a phone call, instant messaging, just to make sure it's valid. And of course, know your network. Whenever you're going into a website that you might be handing over information, make sure it's a secure website. It should have that little lock symbol at the top and it say HTTPS. We know that that will be a secure website. So with that, I'm going to go ahead and turn this over to Blake, who's going to talk about cybercrime coverage and how to reduce that risk in the event you do have an attack.
Great. Thank you, Adrian. I really, really appreciate that. You gave us a lot of great information there. And obviously, everybody's at risk for these types of cyber threats to happen. Before I start, I really would like to just get another quick poll. I wanted to find out just how many of you are carrying cyber liability insurance for your business as part of your risk management strategy. So I'll leave this open if you can kind of just go ahead and click on the answer there, and we'll give it a few more seconds. Great. So it looks like about 83% of you out there are currently carrying cyber liability insurance. So obviously you see a value in it. And that's one of the things that I'm going to talk about today is I'm going to talk about 4 important items. And the first item I want to talk about is the value of cyber insurance. And then I'm going to talk a little bit about what does a cyber insurance policy really cover? What are the common policy exclusions? And what are some of the key coverages that you really should be looking for in a policy? I'm going to talk a little bit about what the average claims costs are and what the average cost of an insurance policy is in this marketplace. And then finally, I'm going to touch a little bit on the path to cyber resilience. What can you do to prepare yourself for a breach, and how do you effectively respond to that? So what I'd like to do is just focus our attention on the value of cyber insurance. And it looks like most of you have a cyber insurance policy in place and probably know some of the core components here, but I'm going to go over them real briefly with you. The core components of a cyber insurance policy really are to reimburse a company costs that they may have to expend to respond to a cyber event. That could be a number of different items. They might have to get a forensic accountant to track down data that they lost. They might have to notify customers that there was a breach. There could be credit monitoring services that they might have to pay for. So these are all costs that a company might have to incur to respond to a cyber event, and that policy is going to reimburse that company under the insurance contract for those costs. The next component that we really want to talk about is if the company gets sued or a claim is filed against them for breach of privacy data or confidential data. And this could be associated with a customer, it could be a vendor, a supplier, or even a competitor. And so you may potentially get sued or have to respond to a lawsuit or a claim. You may have to hire legal counsel to defend you in that matter. You may have settlements or judgments that you might have to pay out. So this insurance policy is going to really pay on behalf of the company for these defense expenses and or settlements or judgments that you might have as a result of a cyber breach. And then really the last core component, which I think is the real value to carrying a cyber insurance policy, is all of the cyber services that are provided with the policy. You're going to have access to crisis management services through the insurance company. You're going to have obviously breach recovery services available to you. There's a lot of great training tools and resources that are available to you online. There's white papers that are always written so you can really keep up to date on what is happening in your industry sector, what are some of the things that are causing breaches, and how you really attack that from a training standpoint. So those are really the core components that I wanted to cover today. I'm going to shift gears real quick and talk to you about what does a cyber risk insurance policy cover. And what I'd like to point out first is not all cyber insurance policies are the same. And I think that's very important to understand. Every policy is what's called a manuscript policy. They have their own insuring agreements. They have their own language in there. So it's very, very important for you to work with your insurance representative or your agent or broker to really understand what coverage you are getting under your insurance policy. Because we all know at the end of the day, when the policy doesn't respond and you've paid out a lot of money for this policy, there is a lot of frustration on the back end. But when we talk about cyber risk insurance policies, there's really two components to a cyber risk insurance policy. The one is what we'll call first-party coverages. And those typically involve loss of digital assets. It could be an interruption component. You might have a failure of the computer system or interruption of your computer system where you're unable to operate. Could be a cyber extortion threat where somebody is holding your computer for ransom and you might have to pay monies out to release access back to your computer system. You might have costs associated with that. It could be a fund transfer fraud or a computer fraud. You might be obviously at risk for somebody posing a threat to your company, disguising themselves as a CFO, sending an email out to an employee asking them to transfer funds to a bank account. And the money could be gone and lost, and you would be out that expense. And then finally, security event costs. These would be your own direct costs that you would incur for a privacy breach. And we touched a little bit about that before. You're probably going to have to respond, notify all of your customers. There could be computer forensic costs associated. You might have to pay for some credit protection services. So when we talk about first-party coverages, these are all these costs that a company may incur that they would want to get reimbursed for. The next thing I'm going to talk about is the third-party coverages, and really that's going to address more of the legal liability that you may be at risk for a privacy breach. And it could come from a number of different avenues. It could come from an employee privacy breach. It could come from a customer breach. You have customers' information that has been compromised and you have to notify the customers. They may turn around and sue you that you violated some sort of statute or law and bring civil suit against you. The third-party coverages is going to basically pay on behalf of damages that you may incur as a result of those claims. So let's shift gears now. We've talked a little bit about first party and third party coverages. I'd like to focus some more attention on the common cyber policy exclusions, what you normally see in a cyber policy. And some of the normal exclusions that you'll notice is the potential for future lost profits. The insurance policy is not going to pay for potential future lost profits. They're not going to pay for the loss of value due to theft of your intellectual property. They're not going to pay to improve your systems. They're going to put you back in the same position you were at the time of the loss. So those are some of the things that you're going to normally see. You're also going to see some additional policy exclusions. And some of those, Adrian, if you could flip there, thank you. Bodily injury and property damage are some other exclusions that you're going to normally see on a cyber policy. Bodily injury and property damage is typically picked up under a commercial general liability policy, so that's why it's excluded. The security standards exclusion, that's a very important exclusion to understand. When you fill out an application for insurance, you're basically telling the insurance company that you have certain security standards in place and that you're trying to prevent these types of breaches or cyber events from happening. If you fail to follow your own security standards when a claim is filed, there could be obviously an exclusion that could preclude coverage for that. So it's very important to understand what that security standards exclusion really means and make sure that you're addressing that when you purchase your policy. War, invasion, terrorism, those are all other exclusions. PCI assessments and fines are typically excluded. And as we all know, intentional, fraudulent, or criminal acts are never covered under an insurance policy. So some of the key endorsements or key coverages you should be looking for on your policy. Like I said before, not every policy is the same. They don't have all of the same coverages. So when we're talking about how to really design your insurance policy to provide you the best protection possible, you really should be looking at some of these key coverages. And social engineering fraud is one that I think really sticks out, and Adrian touched on this earlier. This is going to be those cases where someone's going to deceive or try to get one of your employees or somebody within your company to do something fraudulent. They might send some wrong banking wire information and pose as a CFO and doing that. So having social engineering fraud coverage is extremely important. And that's something that you should be looking for on each and every policy. Terrorism obviously should be a key coverage you should be looking for. You might have payment card industry coverage on the policy that's going to cover you for any PCI assessments or fines that may be levied against you. Cryptojacking and telephone fraud coverage is important. The GDPR and CCPA, the General Data Protection Regulation, and the California Consumer Privacy Act. You want to make sure that your policy language includes coverage for those violations of those particular regulations or privacy acts. You want to be able to make sure that you have some sort of voluntary shutdown coverage. Sometimes, most of the time it's involuntary, but maybe you're trying to avoid a larger loss, or maybe you're taking the stance of shutting down your computer systems to avoid some sort of breach event. So you want to make sure that your policy responds when you do have a voluntary shutdown. And then obviously any HIPAA violations, you may be subject to that. So that's another key coverage that you want to make sure that's included on your policy. Now I'm going to talk a little bit about what are the average claims costs that you normally see in the industry as of today. And there's obviously a lot of different types of cyber threats out there, but I'm just going to focus on a simple breach of privacy data. And if you look at the top of the chart, small and medium companies, a typical breach is going to be in the six-figure range. For a large company, it could be in the seven-figure range. So when you're really looking at, what are the average claims costs as of today, it's quite mind-boggling to see the dollar amounts that are being paid out just for the breach itself, crisis services, and then legal expenses that you would have to pay. So I wanted to make sure that everybody knew, kind of what the average claims costs are and what the company is at risk for. Shifting gears, I'm going to talk a little bit about how our cyber risk insurance policies priced. The typical pricing is based on 4 different factors. The first factor is the industry class. Obviously, a retail store is going to have different exposure than, let's say, a hospital or a IT company. So industry class is obviously something that's going to affect pricing. The revenue stream that you have through your organization is going to affect pricing. The number of records containing personal health information and personal identifiable information, that's obviously going to be a factor in pricing. And then finally, your IT security and mitigation controls. What are you doing to prevent these cyber risks or cyber breaches from happening? What kind of detection and mitigation controls have you put in place? So people ask me all the time, Blake, what is the average pricing for $1 million worth of coverage with a small deductible, let's say a $10,000 deductible? And in this marketplace right now, we're still averaging around $1,500 annual premium. However, I will caution you that pricing is going to start to increase here in the very near future. And the reason we're going to see that is there's been quite an uptick in ransomware claims and also social engineering fraud claims. And as those continue to grow, obviously the insurance market is going to be pressed to increase pricing and increase deductibles or retention. So if you haven't thought about purchasing a cyber risk insurance policy, if you're one of the few on that poll that aren't looking at that, this may be a great time for you to look into at least going through the process of looking at an insurance policy and pricing that out for yourself. The last thing I'm going to talk about is the path to cyber resilience. Cyber breaches are going to happen. It's inevitable. It's the new reality, especially with this pandemic, everybody working remotely. The risk factors have actually increased significantly. Where employees were sitting inside your office and you had control over the computer systems. Now they're working remotely. They may be on an unsecured network system at home. So those are some of the things that you really need to worry about when you're talking about how you're going to get to a position where you're going to be cyber resilient. So there's really 5 fundamental steps I want to go over quickly with you on how to become cyber resilient. First one is to really identify your most critical assets. What do you have that is most valuable to others? Gather intelligence on your cyber threats. Who are the bad actors? Who's coming after your information? Understand your digital profile. What does your online activity signal to others? Is it easy for somebody to get into your network? Do you have certain protocols in place? Once you understand all of that, I think the best thing to do next is build a resilient system. Really work with your IT folks and really put in the most critical elements of a good defense on your systems to make sure that you're addressing all of those exposures for your organization or your company. And then finally, really plan for a breach. It's that simple. We plan for a lot of things in our life. We need to plan for a breach. And I really recommend having a written plan and making sure that you're preparing for a crisis when it actually happens. And one of the best ways to really plan for a breach, if you haven't gone through the application process for cyber insurance, it is a daunting application, but it really gives you a baseline as to where you're at with your risk exposure and what you can do to improve things on your end and how you can plan for that. So with that, I thank you for spending some time with me today. I'm going to turn this over to Daniel. He's going to talk a little bit about banking and accounting best practices. Thank you.
Thank you, Blake. Appreciate it. And I just wanted to remind everyone that if you have a question, please use the chat feature. You can do it private or public. We'll answer those questions. Okay, so before I get started, I would love to poll the audience. Let's see here. Okay, is my video feed working? I hope it is.
It is, yeah, we can see you just fine.
All right, perfect. Okay, there it is. Okay, so how many of you have ever experienced check or ACH fraud, either with your current bank or previous bank? So let's just take a few seconds. Yes or no? All right. Okay, so 2 of you responded and both said yes, so 100%. Okay. Well, honestly, that's really no surprise. I would say that the majority of clients have experienced some form of fraud, either internally or externally. I'll also say, I don't think there's any organization and there's absolutely no industry that's really immune to fraud. So today, I mean, we're going to talk about a few things that's going to help, but ultimately, exactly what Blake said, prepare for it. I mean, it will come. System practices, operational practices, all of this needs to be reviewed often. So whether your company is using traditional payment types like checks or you're fully electronic, you are still susceptible. And it's simply because check fraud's rampant. I mean, ACH, wire fraud, it's still on a rise. Cyber fraud, it's a real threat, and I can tell you banks spend hundreds of millions of dollars every year just combating it. Even the most secure systems, they're just not invulnerable. And it's because the sophistication, the exploits, they're changing all the time. Every year they get better and better. So I'm here to share some recommendations that your company can take to prevent fraud. And some of these are extremely simple. You have available technologies right at your fingertips, but some are as simple as just changing your policy and procedure. All right, so I love to start first with account structure. Minimize the number of accounts where possible. Most companies have done a great job doing this. They're consolidating the number of accounts that they use, but I still see my fair share of accounts that are open that for some kind of specific intent that really never materialized. These accounts are just left there, they're forgotten, they're usually grouped to other accounts for billing, and so they're ignored. These accounts that are out there, they are often target for internal fraud. So check your accounts. If there are accounts out there that are no longer required, close them out. The other thing is segregate accounts with greater risk. And what I mean by that is if you do a lot of international wires or you have a high volume of ACH debit activity, use an account specifically for that, but be careful because really the goal is to minimize the number of accounts. But I mean, there are tools out there and services that will help prevent fraud, such as ACH positive pay or just check positive pay. But you can use specific accounts for just international wires. I see it a lot. The other thing I would mention is add filters to your accounts. All banks can typically flag accounts with specific filters, such as post-no check filters. Placing these filters are easy. Every bank can do it. They're designated for accounts that you'll never issue a check out of. And so it automatically protects your account, and usually it's no cost. So you can do this with virtually anything. Wire activity, ACH activity, over-the-counter transactions, virtually anything. You can put specific filters on them that would prevent any kind of activity from going through. All right. Oh, I got a question come in. Okay, so I got a question in private chat, and it says, can you explain ACH positive pay? Okay, sorry about that. Actually, I'll explain both, check positive pay and ACH positive pay. The easiest way to explain check positive pay is it's basically the bank customer telling their bank before they issue the checks what checks they're writing. It's usually a very simple file that contains a check number, a dollar amount. You can include additional things like a payee name on the check, but it's as simple as really just check number, dollar amount. When that check is then presented at another bank, They have to still clear it through that drawing bank, or the bank that wrote the check. And so at that point, if positive pay is on, if something does not match within that check file, it's going to create an exception. And so you'll either be notified with an email or a text, and you'll see that image of that check, and then you'll make a decision, either pay it or return it. So it's very simple. ACH positive pay is even easier for a bank customer because you don't have to provide the bank with anything. Your bank will notify you if a company is trying to debit your account electronically. And then you have that decision. You can either pay it or return it. Let's say, for instance, this is a company that debits your account on a regular basis, like for payroll. You can accept it and then say, okay, going forward, I approve all debits. You can even get more sophisticated and say, okay, I approve it, but let's not have anything over $10,000. If that occurs, notify me. So I hope that answers the question. Okay. All right, so I just want to be real quick on check supplies because ultimately the goal here is to be more electronic. Paper checks are an easy target for fraudsters, and so the more payments that you can do electronically, the better. But the first thing on here for check supplies is when you're ordering check supplies, use an established vendor. They're going to offer the very latest and greatest in features and in technologies. And it's actually pretty fascinating. These checks can contain fluorescent fibers, bleach reactive stains, thermochromatic inks. I mean, it is pretty neat. But I mean, all these things in reality are great, but if a crook has your account number and they have your routing number, they can use cheap check printing software, a decent home printer, and if you're not using positive pay, I mean, those checks will get through. All right, so Adrian, if you could go to the next slide for me. Okay, thank you. All right, so let's discuss transaction controls. There's a few obvious, but these are often overlooked controls that really every company should do. The first that I would suggest is reconcile often. Many banks offer these services, so if you can't reconcile your accounts, you're on, internally on your own, you can actually have the bank do this for you. Banks offer what's called partial and full reconciliation. And so every day you're looking at the account and you're making sure no items that you did not authorize are going through. I'd also say keep remote deposit scanners locked. Everyone leaves them open and it's easy to snatch one of those things. And although they do have IP tracing in them, you can trick those machines and you can reroute deposits into different accounts. Shred documents, sensitive documents, shred them. Same goes for the remote deposit machines. If you have checks in drawers that have already been scanned, rule of thumb is keep them for about a week to 2 weeks. After that, destroy them. I would say set limits. Wherever you can, set limits. Wire limits. You can do them daily. You can do them by wire. You can do them for an entire group of accounts. Setting limits just encourages people to slow down and make sure that they're sending wires accurately. I would also say segregate duties. I don't think one person should have all authority from create, approve, and release. I mean, you can keep those, but if you do, set a limit. If it's a wire that's over $50,000, create some kind of dual authority or approval. But the absolute most important on this list is converting paper payments to electronic formats. So convert paper to electronic. ACH payments, virtual card payments with exact pay, all these things are going to reduce your paper. Paper will never go away. That is a guarantee. But if you can work on limiting the number of checks that you're sending out, you're going to reduce the possibility of fraud. All right, let's jump to the next slide, please. Oh, actually go back, sorry. I told you to go one too many. Internal controls. This is my last slide. So I'll mention this one again. Most important bullet on here is dual control. Use dual authorization for as much as you can in the organization. You can do it for checks. You can do it for ACH. You can do it for wires. You can even have a dual control when users are added to an online profile. Another person needs to go in and authorize that. I'd also say set up policies to disable all user IDs and passwords. If someone's going to be leaving the organization, even if it's for a small period of time, disable their password or place them on some kind of block or hold or freeze. It's easy. It's available. Okay, last thing I want to mention on here is checking accounts. Check in on the accounts and make sure that your signers are still, not only your signers, but anyone that's authorized is still up to date. It's still accurate. So many times something will happen with an account, client will reach out, we have to act on it immediately, and the signers are not correct. And it's been that way for months, or, you know, I don't want to say years, but it's been that way for months. Trust me, if fraud occurs and not all the signers are accurate on there, you're going to be losing valuable time. So it's a simple task. Look through your accounts, make sure signers are still up to date. Yeah, actually, I said that was the last one. I have one more. Slow down. Anytime an urgent request comes through, it should be a red flag. Every case of fraud that I've ever witnessed at the bank, it was because someone was being pressured into meeting a cutoff time, or something needed to be released immediately. No time to wait. When that happens, there's errors can be made. People are not looking. It's a red flag. All right. Adrian, I'm going to turn it back over to you. I didn't see any additional questions come in the queue.
Okay, well, thanks, Dan. And if we do, we can, we'll stop and answer them. We can answer them with Dan. But thanks for sharing, both of you, Blake and Daniel. Those were both good information from different perspectives. And I think these case studies are really going to hit some of these points home. And Daniel, I agree with you. The slow down portion could save a lot of people also on the cybersecurity side as well. So let's talk about a couple of case studies here. And we have 3 of them for you, and they all have similarities, but they have a couple differences. So this first one here, and of course the names have been kept anonymous here. These are private entities, but I'll give you the information that hopefully you might identify with at least one of these. Especially it looks like half of you or 60% have been through a cyber attack, so there's a good chance it's been one of these type of cases. So first off is a company here in San Diego. They are a sporting goods manufacturer. And what was unique about them, we worked with this company to help them respond and obviously make sure that this doesn't happen again in the future, prevent it happening again. But they're an e-commerce company, which means they manufacture their own product and ship directly from their own website to the consumer. That's an important note here on this attack. And the type of breach they had was a phishing email, which led to ransomware, right? So somebody clicked on an email in the organization that fooled them. They downloaded a file. Ransomware lurked on their network for about 3 weeks. And that's common. The ransomware, typically, these hackers are smart. They don't want to just deploy it right away and start encrypting your files. They want to learn more about your company. How big is the company? What's the profitability like? You know, how much can I ask for in a ransom that I think this company is going to pay? And that's exactly what they did here. They took it even a step further, which was pretty malicious in this example. They were able to get into the admin access of the network and actually delete this company's backups. So this company, unfortunately, looking back, hindsight's 2020, they really did a poor job of securing their backup files. And so as an IT department, one of the first things you do when you know you've been infected with ransomware, you shut everything down, you go to your backups and you try to roll back and hopefully crisis averted. Well, in this case, they tried, the backups are simply gone. So this shut down this global company. They have, I think, 42 offices globally. they were shut down for nearly 2 weeks. No company email. They couldn't respond to customers trying to purchase. They couldn't ship out product. It cost them severely in their business operations. The ransom wasn't cheap either, but it was just a portion of the entire cost. And again, typically they asked for Bitcoin. They asked for just over $1 million in this case, and they had to pay it. The company did not have any cyber liability insurance. I'm actually surprised to see the stats, Blake, on this webinar that many say they have, because a lot of the companies I work with, of course, we get called usually after the fact. No one calls us, hey, Zeta Sky, we'd like to get extra security, just because they typically have been through an event. But in this particular case, Blake, do you think that the cyber insurance would have helped them in any case, maybe shorten?
Yeah, it's a great question, Adrian. And just looking at this case study, there's a number of different things that have happened here where I think a cyber insurance policy, if crafted correctly, would be able to respond. The first thing I noticed was, obviously this was a ransomware attack. So, making sure that your cyber insurance policy has a ransomware coverage on it that potentially would help you respond. And one thing I'd like to note about ransomware coverage is the importance of immediately notifying the cyber insurance policy or reporting this as quickly as possible when you know that there's been a ransomware, because if you're attempting to try to pay this ransom on your own and then figuring, oh, well, I'll just turn it into the insurance company later and they'll reimburse me for whatever I paid out, you need to be real careful with that. If you make any settlement or pay this ransom without the consent of the insurance company, there are provisions or clauses in those insurance contracts that potentially you could end up having to become what's called a co-insured or pay a majority of that, and you wouldn't get reimbursed for the entire amount. So it's very important to know. And then the second component really is, the ransomware was one of the items that cost the company a significant amount of money. But it was really the shutdown for 2 weeks. There obviously was some direct costs and some indirect costs associated with that. And there, probably some net income loss. They were unable to obviously sell product and probably lost a lot of revenue as a result of that. So having an insurance policy that has the business interruption coverage component embedded in the cyber insurance policy would potentially respond in that situation and pay for that income loss during the period of restoration or for the shutdown for the 2 weeks. So yeah, thanks for bringing that up, Adrian. I think it's really important that people understand what the risks are and how the insurance policy can be tailored or structured to really address different things that are happening with one particular incident.
Thanks, Blake. That's good intel. And again, hindsight's 20/20, but that's the whole goal, is to hopefully learn from their own mistakes, but other companies can learn. And really, that's what the FBI puts that report out for, is so that other companies can avoid becoming that victim in the first place. So let me move on to the second case study. This takes it down to a couple differences are that this is a much smaller company, family-owned manufacturing company, also here in Southern California. And the breach here was social engineering, social research, executive spoofing. Some people call it spear phishing. And the main difference here that I want to point out is that there was no technical breach. There was no email account that was compromised. There was no deploying of ransomware. They simply just tricked somebody. So let me walk you through what happened. In this case, the hackers just researched the companies online, found them on LinkedIn, and found out who is the vice president of sales, who is a junior controller, right? Once they had those two names, they were able to create a fake email called spoofing that looked like it was coming from the VP. And the email said something like this: hey, junior controller, I'm leaving that meeting right now. It went well. We're going to get the bid. Please make sure that this invoice is paid right away to order the equipment, right? It was to purchase some capital equipment so they could produce their materials for this new bid that they won, right? That the hacker was telling them. And it said specifically, do not text me, do not call me. I'm still finishing up the meeting, but I need this paid before I leave, right? So just like you were saying, Daniel, urgency written all over it. In this case, the junior controller, I think there was a failure, which I'm sure you'll add to a little bit, Daniel, but really from a cyber standpoint, they didn't have a very basic tool in place, which was cybersecurity training. The employee didn't know what a spoofing email would be like, didn't hear about these scams before, literally yelled across the room to her direct boss, who was the controller, saying, hey, I have an email from so-and-so. They said we won the bid. Oh yeah, go ahead and pay that. So this person actually did several wire transfers because, again, the hackers are in it to make money. Once it happened the first time successfully, they did it again 2 more times, totaling just over $150,000 in wires. Again, Blake, they did not have cyber insurance at the time. So this is a good example of how you don't have to have a technical breach. This was just fooling someone who wasn't trained. Unfortunately, this junior controller lost their job. But Daniel, can you give us a little bit more insight of maybe from a financial standpoint, what they could have done to mitigate that type of risk?
Yeah, it's awful. I mean, we see this all the time. Well, the first thing you mentioned it, I mean, they need training. We get phishing test emails all the time internally. I have won trips to Jamaica 1,000 times. If they had some kind of dual control that was already pre-established, it would have prevented this. And you can do that easily. When you have a wire module on most bank platforms, you can say any new wire automatically requires someone else's approval. Slow down, take those steps, and it would have been caught.
Yeah, and I can tell you, when working with these companies, when you help them respond to these breaches, it sounds so silly looking back at it. And when we looked at the email, we showed the client, hey, this is what happened. This is who it came into. You look at it, hindsight is 20/20, like, oh, who would fall for that? But
right.
Again, as an employee, there's that sense of urgency. They didn't have any process in play. They weren't trained on it. It's just sad and unfortunate. So let's move on to the next case study. Daniel, if you can tell us a little bit more about this one, this would be great.
Sure. So similar situation, little different. Company out of Irvine, California. This was a business email compromise. These criminals actually hacked into their network, got into their email account, did a few things. I mean, they pulled invoices, legit invoices. They created their own invoices. But ultimately with this one, they impersonated the CFO. And similar to your story, they reach out to the controller. It's a legit email, well, what looks legit from the CFO. It's right before the Fed cutoff time, and it's stating to send the wire immediately. It needs to go out today. Can't be any later. And unfortunately, there was no dual approval. That controller did not pick up the phone and call to verify or send an instant message. None of that was done. The bank actually wasn't informed until about 3 days later. And it was because everyone thought it was just fine until someone came and reconciled about 3 days later and said, why is this wire, what is this to? And so unfortunately, when it comes to a wire, it is very difficult to try to get those funds back. I mean, once it's been wired, it can be anywhere in the world. ACH is different. So there are rules that are established with ACH that gives you that time and some flexibility. And if this would have to occurred and they sent an ACH payment, I can guarantee you they would have been able to retract that ACH and get that returned. So, unfortunate.
Yeah, thanks, Daniel. But like from an insurance standpoint, I mean, in those last 2 cases where you're essentially voluntarily wiring money out, is there coverage for that? Or are you still covered?
Right. So yeah, great question. You want to make sure that your cyber insurance policy contains social engineering fraud coverage. It's typically what happened in this last case study. There was an impersonation of the CFO of the company requesting controller to send out an urgent wire. And we see this. I mean, this is commonplace. We see this quite often. Again, having the right, mitigation controls in place are critical and really addressing this up front. But, the loss happened and had they had the right insurance policy in place with the social engineering fraud coverage, that would have responded in this particular situation. But again, it's important to note that you have to have the right coverage. And so I would urge everybody to really review their insurance policies, based on the types of exposures that they might have, to make sure that, you're kind of going through a case study like this and understanding how your insurance would respond. So.
Thanks, Blake. So those are the 3 case studies. Hopefully you guys found those educational. Maybe you've been through something similar. But I just wanted to give a quick shout out for next month. If you haven't heard before, October is National Cybersecurity Awareness Month. Last year we did we hosted what's called the Cybersecurity Summit. It was an in-person event. Blake, I know you were there. It was a great attended event. Well, this year with COVID, of course, we're changing it up. We're not doing an in-person event. We're changing it to a webinar series. Instead of it being a 3-hour in-person event, we're making it 3 one-hour separate webinars, each with a little bit different topics. So when we send out this recording for the webinar, I'll give you some links to this. If you want to learn more about a particular subject, there'll be more detail in there, and feel free to attend. But with that, I know we're coming up on just an hour on this webinar. So Heather, I will turn it back over to you to close up.
Thanks, Adrian. So just appreciate everybody's time today. We know that you're all super busy, but this is a really important topic, and wanted to just provide some real practical applications and solutions and good reminders for you all to combat fraud, especially here in the wake of COVID. So thank you all for joining us. This was recorded, so we'll send out a link to the recording to everybody who was able to make it, and look forward to our next webinar. So take care and have a great rest of your week.